What's going on, FUD Nation, and welcome back. Today, yes, we are very excited as Bitcoin has shattered some of its resistances on the way up to what we hope is an absolutely historic bull run. Right now, at the time of recording this, Bitcoin is sitting just below $9,000, and it had really struggled to get above that $8,000 mark. And so at this time, I really wanted to put out a video on what I think is a very important topic called Elliott wave theory. Yes, Elliott waves. As I am Elliot Trades, I had to cover the Elliott waves. Now, before you get at me and jump in the comments saying Elliott waves are the truth and the future, or Elliott waves are a complete hoax, just understand that Elliott waves are a way to understand and measure market psychology. Now, if you are a technical trader, I do not recommend that you use Elliott waves to predict every single movement of the market, as Elliott waves are not exact mechanisms. However, when understanding market psychology in tremendous bull or tremendous bear markets, Elliott waves can be extraordinarily helpful in understanding the different waves of participation in those bull or bear trends. So to understand a little bit more deeply how this bull market could be shaping up and what are realistic targets for the end of this bull market, the most bullish of the bull scenarios, we are going to be diving in and using our good friends, the Elliott waves. So if you're interested in seeing how an Elliott wave model prediction could end up showing a Bitcoin at over $500,000 at the end of this bull market, then do nothing more than watch this video, because we are going to show you how the Elliott wave model is showing a tremendously positive and bullish scenario for Bitcoin. Now, for a bit of background in history, the Elliott wave was created by Ralph Nelson Elliott, who was a professional accountant who unveiled and really uncovered the psychology behind a market cycle. Essentially, what the Elliott wave measures is market psychology. Now, we're going to take a closer look in just a minute, but essentially the Elliott wave is 5 major waves of market participation, marked by 5 minor subwaves within each wave. Now, if that was a mouthful, that's okay, because we're going to go through this very slowly. Here you can see a 5-wave cycle, starting right here before the 1, as the 1 is a bullish wave. Then we have a 2, which is a pullback. 3, another bullish wave. 4, another pullback. And then 5, you have the culmination of the Elliott wave cycle, marked almost always by a 3-wave downtrend, where you have the A, B, and then C wave. Now, if you see below here, each wave has 5 subwaves within it. Just like the 1 wave had 5 subwaves, the 2 wave has actually 3 subwaves, as it's a bear wave. And then we go back up, back down, and back up again. So these Elliott waves, while not completely precise, usually indicate different market psychology factors that enable for these waves to take place, which we'll dive into very, very shortly. Now, I'm sure you guys have seen this chart, which was brought up a ton during the bear market for Bitcoin, which is the Wall Street cheat sheet psychology of a market cycle. Here, you can see obviously disbelief turns to hope, optimism, belief, thrill, and euphoria on the way up. And if you look closely, you can almost see a 5-wave pattern here, with a first wave between disbelief and hope, then a pullback for a second wave, a third wave up to optimism, then a pullback, and then you get belief, thrill, and euphoria on the 5th wave, which is usually the most vicious and rapid wave. Then you get a big 3-wave pullback from euphoria down to this bottom tip, up to complacency, and then down all the way to anger, which is usually where we end up at the end of a bear market. Now, this, of course, is not meant to be exact or numerical. It's just showing you the psychology of the average investor, or even the not so average investor, and how people approach their investment theses. We are humans, and we are the connecting fabric between the price action in almost every single tradable market. And that's why these psychology cheat sheets seem to be eerily accurate, even if they were created 50, 60 years ago, way before the birth of cryptocurrency. Now, if you want to see a fuller version of this video, I highly suggest you check out a video by Alessio Rastani, which I am somewhat paraphrasing in my correlations for Elliott waves in this video. Now, I wanted to make it a bit more accessible and a bit more snappy, the content, but if you want to check him out, I will link to a full version of his video in the description below. These Elliott wave points that I'm referring to here were taken from his video, which I think was very informative, and I wanted to give it a little bit more shine in the crypto community, so hopefully it could could benefit one of you who didn't get to see it. If you're looking to see if Elliott wave theory has ever proven accurate, look no further than the 2015 to 2018 bull run, where you can see a bottom happening somewhere in mid to early 2015. Then we see a first wave up marked by this one, a pullback of a significant proportion, over 40%. And that is one of the big aspects of Elliott waves that I want to be warning you about, is that part of this predictive method is understanding that there are major pullbacks that are included in the Elliott wave formula. To 2, a 40% pullback. All the way up to 3, we go from about $210 all the way up to almost $6,000 or $5,500. But again, we see an absolutely staggering pullback from $5,500 down to $2,900 or slightly below. And you have to understand, if you were in that moment, you might see this as a cataclysmic crash. Same with the wave 1 to 2 and same with the waves 3 to 4. But then you get an absolutely euphoric push, which brings the coin from $2,900 all the way up to $20,000. So that's the kind of euphoria that happens at the end of the market. And usually the first wave is marked by smart money or institutional money. Then you get a pullback, and then you get more normal average retail investors. The sort of tip of the spear investors come first, and then you get the final push, which is, I guess, FOMO buyers or FOMO investors, people who are hopping on the bandwagon who maybe didn't know that much about the asset, who are getting in at the end of the trend. And that's what this fifth wave is all about. That's the euphoria wave. That's the buying the top wave. That's the your cousin or your friend who bought the $20,000 Bitcoin and now hates cryptocurrency. That's the fifth wave buyer. So the point of this video is you don't want to be the fifth wave buyer. As you can see, there's also a three-wave pullback, even visible in 2015. A, B, and then C all the way down. And you can argue which are A, which are B, which are C. The point is not really about arguing these small minutiae. It's about understanding that there is a general trend of a market bull cycle and a general trend of a market bear cycle. And that it doesn't happen in one single push, but it happens in waves. Looking again, you can see this trend visible in 2012 and 2013 with Bitcoin, where you have a bottom here made at about $6.70, if you can imagine that, a bull up here to about $14, and then a tremendous pullback down in the sort of $8.50, $9 range, which would have been a tremendous blow if you were there at the time. But of course, that was made significantly better by a rush all the way up to $80. If you could imagine 10xing your money in just a couple of months on Bitcoin, that's what was happening. Then we get a pullback to really about $48 here, and then we go all the way up to 240. So if you had bought somewhere in this first wave or in this second wave, you would have made some significant gains. But that's not all, as we know that Bitcoin had a lot more room to run. And actually, that final run in 2013 topped out at about $1,200. You can argue that the big pullback here was to about, before that final wave was pullback to about $60. So if you're doing the math, $60 to $1,200, just call it an 18 or a 20x. That is the kind of exponential mathematics that we're dealing with here on the Bitcoin chart, and the reason why you have reports of so many Bitcoin millionaires. Imagine getting Bitcoin at $60. Now, this is what the Elliott wave theory might have looked like just a few days ago, as people were predicting that 8,000, 8,200 might have been the very top of the first wave. And people were predicting that we were due for a significant retracement. But just know that whenever the first wave completes, whether we've already completed it or we will be looking forward to completing it in the future, we can be looking for a significant pullback. And that kind of a retracement could leave us here in the 5,200, 6,400, 7,500. We're not sure, but a significant retracement is usually common in these kind of parabolic cycles. Now, looking at these smaller timeframes, we can see a smaller mini 5 waves within the first wave of this pattern. A big pump, a huge dump. The third wave here up is a bullish wave, a fourth pullback, and then a fifth absolutely parabolic compared to the others, little final completing wave. And together they formed the first wave of the pattern. Now, I agree with a lot of the Elliott wave analysis that was done by Alessio Rastani, which I have repackaged in many ways for you today. However, I disagree here with the final step, as the final fifth wave tends to be exceptionally parabolic. And I believe that the final fifth wave of this particular bull run will be more parabolic than almost any other asset class in history, including prior Bitcoin runs, for the reasons of institutional support, significant infrastructure upgrades, and also the world world's heavyweights of financial power starting to play ball in this cryptocurrency industry. Now, I also believe that the FOMO that will kick in once people see that Bitcoin is back from the depths and has reached and surpassed its $20,000 all-time high will just be absolutely unmatched, unparalleled in history. Now, what I'm trying to say is that this fifth wave, I believe, will be as parabolic, at least, as prior bull runs. But let's just take a variety of predictive models to try to arrive at what that final fifth wave of this bull run might end up being. So here you can see Alessio predicts that the fourth wave pullback will end up putting Bitcoin around $36,000. Now, the first Bitcoin bull run had the fifth wave perform a 20x multiplier, which would leave Bitcoin at from 36x times 20 would give us a $720,000 Bitcoin. Now, given that that would put us at roughly double the market cap of gold or over double the total market cap of gold, I think that this might be a bit optimistic. So let's just look at the second bull run in 2015 to 2018, which had a 7x multiplier between the fourth and fifth wave completions. That would leave us at about a $252,000 Bitcoin, 7x times 36,000. Now, if you take the average of the first and second bull runs, you get a 13.5 times multiplier. Again, a bit optimistic, as this would give us nearly a $500,000 Bitcoin at $486,000. But who knows, it's still certainly possible, even though that would outstrip the market cap of gold by about 50%. And finally, we take the trend, which I think is the most conservative method, which is to say, what's the relationship between the first and second bull runs? And let's apply that relationship again to the third bull run. So we take 7 divided by 20, and you get 0.35. Then you multiply that by 7. That gets you 2.45. And so you have a 2.45 multiplier against our 36,000, which gives us a grand total conservative prediction based on Elliott wave theory of $88,200. So no matter which way you slice this up, whether you're taking a very conservative model of prediction with just an average, a trend average showing a diminishing parabolic return cycle, you still end up with over $80,000 as a Bitcoin price at the end of this bullish bull run. If you take a more extreme, more parabolic approach like we took in 2013 or 2018, 17 rather, then you'll end up with a Bitcoin price that really matches the market cap of gold in the hundreds of thousands. And that is very, very exciting. But what's most important and most exciting is to understand that these market cycles come in waves. And those waves have been documented significantly over the time and history of the stock market and other asset classes. And while Bitcoin is kind of like plutonium in that it can't be evaluated in the same ways as other asset classes, there seems to be a trend where you can still rely on certain psychological indicators, and that the market psychology seems to hold true, even if the gains and the percentages are significantly higher than in other classes. Anyway, let me know in the comment section, what do you guys think about Elliott wave analysis? What do you guys think about this current Bitcoin bull run? Do you believe that Bitcoin has the ability to surpass $50,000? Do you think it can reach that $88,000 conservative target by this Elliott wave analysis, by this Elliott trades analysis? Do you think it can go even higher? Do you think it can go to the market cap of gold, which is over $330,000? Or do you think it can go even higher? I'm very curious to know what you guys think. And of course, let me know if you're already holding Bitcoin, if you're a new participant in the space, or if you're just doing research to make your first Bitcoin buys. Let me know. I'm very curious as to who is looking at this content and who is looking to participate in Bitcoin for the very first time. If you're not already subscribed to this channel, I encourage you to hit that sub button and click that little bell notification. I'd also appreciate it if you smash that like button. It really helps spread the content and lets YouTube know that you enjoyed this video. As usual, I'm Elliot Trades, you're watching FUD TV, and I'll see you very soon on the next episode.